The information in this recording is general in nature and should not be considered personal advice. Please consult a professional and qualified financial advisor to discuss how this information may apply to your personal circumstances. Thanks for listening. Hi, Dane here from Own Financial Planning, and joining me again today is Hugh Lam, investment strategist with Betashares, and today we're going to talk about the opportunities in the cybersecurity sector. So at the date of this recording, we've just had the Crowdstrike attack last week and global shutdown, and it seems like nearly every week there's some sort of security breach, and it's fast becoming a major geopolitical issue. So are you able to sort of give us a high-level overview of the cybersecurity landscape at present?
Yeah, sure, Dan. So the cybersecurity landscape, it's evolving quite rapidly. What we've seen is a number of different trends over the past few years. So we've got geopolitical tensions, the rise of remote working, and artificial intelligence. Those confluence of factors has made cybersecurity ever more important because that data is being more prone to bad actors and adversaries out there. So we're starting to see a shift away from what we call traditional software providers. Think of McAfee's back in the 2010s, right? So they protected against Trojans, which were files that a customer would pick up and act as a potentially good file. But now we're moving to more advanced techniques like the ones that Crowdstrike provides. So yes, the world's constantly evolving, and as a result, the cybersecurity landscape and the solutions that are provided, they do definitely have to modernize, especially as AI starts to advance.
So at Betashares, you've got the Hack ETF, and are you able to tell me a little bit about that fund's objectives and maybe some of the names that appear within that portfolio at present?
Sure. So Hack is our global cybersecurity ETF, and the objective here really, in its name, is to provide exposure to leading global cybersecurity companies. So it is a portfolio of 30 stocks. It's quite concentrated. Some of the names in there include CrowdStrike, but we also have holdings in Palo Alto as well, Infosys, Broadcom, and Cisco as sort of the top 5 holdings. So that's Hack in a nutshell.
And what sort of opportunities do you see in this sector in the next year or so?
I think that cybersecurity will be a thematic that's definitely here to stay. I think that what we've seen is IT CIOs around the world, they've actually named security software or cybersecurity as part of their budgets that they will least likely cut their spending. Or in other words, they will definitely look to increase spending within that space. And that's because as the world evolves, data becomes more precious to organizations, whether it's to build the business or to keep analytics of how it's going. That data needs to be protected. And so cybersecurity has huge tailwinds, in the short to medium term. So it definitely is here to stay.
Sure. And talking a little bit more about the Hack ETF, what are the costs and how can investors access the product?
Sure. So Hack has a flat management fee of 67 basis points or 0.67% per annum. And you can access it through any brokerage platform like CommSec or NabTrade. The ticker is Hack, HACK. And so that's an easy way to gain exposure to those leading cybersecurity companies.
And what sort of role do you see Hack typically playing in investor portfolios?
Yeah, it's a good question, Dane. I think that with Hack, it is a thematic fund. So what that means is typically it might be a good complement to your core holding. A core holding is, it might be a broad-based benchmark like the Australian 200 index or the S&P 500. That might be a natural complement. So particularly for Australian investors, which are invested in, the Australian 200 index, that's overweighted to industries like the materials and financial sector. It might be a good complement to add Hack, which is more overweight the information technology and communication services, as a nice blend to that overall portfolio. But one interesting thing is that, despite it having, that higher weighting to those sectors, you might think that the growth and volatility of those companies might be high. But we actually see when we compare Hack to the NASDAQ 100, Hack actually has lower drawdowns or maximum drawdowns. And that's because the cybersecurity industry is very resilient. Coming back to that point that CIOs are unwilling to cut spending within that space just shows how strong spending is. And so it is less susceptible to economic cycles and does provide that resilience that investors might look within global cybersecurity.
Some really great insights. Thank you very much, Hugh. And if you want to learn a little bit more about how we utilize Hack in our asset allocation strategies, you can contact us at ownfinancialplanning.com.au. Thanks for listening.